what does ESG stand for?
Amazon is doing in India. 10 overs are left. So US has passed a bill. So that's what actually ESG does. Apart from
Hello, everyone, and welcome to another episode of Excel with Experts, where experienced managers are here to join us to help us with all the nitty-gritty aspects of the stock market. I am Abel Matthew, and to join us today, I have one of the most brilliant personalities who is very much experienced in the world of stock markets for the last 10 years and who is a certified chartered accountant and CFA. Please welcome the founder and director of Nivishai. How are you? How are you feeling today?
I'm doing great, Abel. Thank you so much for inviting me.
One of the biggest strengths, especially of the green energy basket, is that ESG. What does ESG stand for?
The full form is very simple. It basically, has environment, social, as well as governance, mandates that people should consider before investing. So we always wanted that we should not pollute our environment, right? It's not new as a concept, but the prominence in the finance world has greatly increased for the past decade, I would say, where a lot of funds have this mandate where they will not invest their money if companies are not complying with these three gold standards which have been set globally. And these are still things which are early days where the standards are still being framed. Standardization is still happening.
So, if I've heard it, so socially responsible, so we invest in something socially responsible or sustainable investing. So does that mean if I invest in these companies, I become a good citizen? Is it something like that?
No, you got to do your duties as a citizen. Definitely, it's not that it's a substitute of something that you can avoid your duties and just invest in a socially responsible fund or an ESG fund and you're done with it. But yes, this is something that you should do apart from being a responsible citizen yourself. The whole world works on finance. You just look at how terrorism has completely collapsed in a lot of places where financing those activities have collapsed, right? So ESG goes a long way in creating the ecosystem where you want companies who are socially responsible, environmentally good, at the same time has corporate governance standards to only survive, and rest we want them to perish by stopping the, you can say, blood that flows into them. So that's what actually ESG does, apart from being socially responsible yourself.
So that totally sounds like a totally new concept. When you look back, when actually did the trend of ESG begin with, how does it help a normal investor or a layman investor?
The chatter around the trend actually goes way back to the 60s and 70s. But the point was that because there was resource abundance, no one actually paid a lot of heed. So now when we've over the years seen that is actually distorted our environment, or maybe in certain societies the way companies behave, and we always say that necessity is the mother of all inventions, right? So now there are a lot of reports which have disturbed the global fraternity, that if we don't act on the environment or on social governance standards, it'd be pretty late for things to now come back to its original shape. It's like in a cricket, right? Now that only 10 overs are left, and you need to score some 70-80 runs. So you pick up pace, you want to hit more, right? So that's the kind of, you can say, time horizon we've reached on these things. If we don't act now, it's now or never kind of a thing.
But now comes the question about how do I know about the companies or the sectors or industries, and how will those companies fit into my portfolio? How do I get to know that? Are there any key indicators what companies will fit into that aspect of ESG investing?
So please understand that if as a layman you're just approaching this, there are a lot of reading materials out there that can guide you. But the point is that when you're screening industries or when you're looking at a lot of industries, you also need to consider the return requirements, right? It is not that I am into socialism where I'm going to go give some charity to a fund and I'm not expecting something out of it, because it will never be something which can happen in the shorter term, right? They have additional burden in terms of satisfying the requirements to be categorized as ESG companies, right? Hence, they will in fact compromise on their profitability in the shorter run, and they're hoping that in the longer run will be far more sustainable and hence get a better valuation from the society and from the investors fraternity, right? Because of the focus on ESG, a lot of industries are now gaining economic momentum in the sense that their cost is getting reduced than the companies which were actually making products from the traditional standpoint. Just to give you a small example, the traditional thermal energy that we used to make, the cost of manufacturing solar has now gone below the thermal energy that is produced out of coal. So this is just not making sense in terms of just ESG investing for the sake of feeling good about it. It's also making economic sense where the per unit cost of companies around the world would go down. I mean, think about it. If Apple is using solar energy in its manufacturing process, its laptop are getting made cheaper also, apart from being ESG compliant. But then you need to take a judgment where these scales are achievable, because if these scales are not achievable, you'd be caught in sectors or companies where they will go under this burden of being ESG compliant, and if they are not able to scale at a appropriate time, they even run a risk of having financial problems and run into difficulties financially.
Blows my mind that how much of a domino effect that a company with an ESG compliance can have. I'm not sure, so you can correct me. When Apple decided to not put chargers with their phones, is that something similar to this?
Because at the end of the day, if the same charger can be used again and again, why to have a new charger which would go as an electronic waste eventually, right? Just look at what Amazon is doing in India. Amazon in India has a mandate that all its chains would be of delivery chains should be converted to electronic vehicles. Hence we can comply and get more orders from Amazon for the delivery, get more business. At the same time, my running cost is going down.
Brilliant. I mean, it just feels like, why didn't we do this much earlier?
Yes.
I think
So Nassim Taleb, has this brilliant analysis where he says that, the wheel was invented centuries ago, right? And humans are carrying luggage since, again, centuries. But it took mankind centuries to figure out that you could attach those wheels to your luggage and carry it so easily, right?
moving into that, so now we know what are the different factors of ESG. We know how good it is, how it impacts. It's a good trend. But is there a measurement, a scale, or a score that I can use to perhaps evaluate how much of it is compliant towards ESG, or let's say how much is it leaning towards ESG, and probably it's a suitable pick for me in my portfolio?
So there are ESG scores that are available for you to check when you're making an investment. Though the standards are different currently, and a lot of bodies around the world are trying to bring a common mandate or a common reporting standard wherein the ESG scores can be defined globally. There is an examination where there are three subjects: environmental, social, and governance standards, right? So the companies, they are judged on first the broad three matrices, and within them a lot of things need to be checked. For example, when I'm talking about environment, I need to check what kind of carbon emission the company is doing, right? What targets does it have to go to net zero in how many years, right? What are the various value chains that it is using, and how much pollution is happening across the value chain? So these are the kind of questions that one needs to answer, and then there's a score assigned. Then on the social front, right, you need to ask whether the company has policy which is favorable to its employees or not, whether there's child labor abuse happening or things like that, whether they are very much considerate of their customers and making products which are considerate to what kind of quality that their customers could get. So these are the kind of questions you need to ask, then you get a score. And third, on the governance standard, again, whether the company is having a board which gets payout which are in normal terms, or whether they are handing out payments which are detrimental to minority stakes or not, whether the company has policies regarding its dividend paying to the shareholders or not. So these are the kind of governance standards that are again checked, and then a score is assigned. So an average of all these three scores then become a broad index. But yes, the standardization still would take a lot of time.
Got it, got it. So the details are always in the small things as well, which investors have to look into. But I like how there is a process. This is not an investment trend that is simply based on a philosophy. Yep.
So we were visiting a company and there were barrels and barrels of stock that was just lying in the backyard. I just asked the company's production manager that what are these barrels for. So he just told, currently our demand is so high that we don't have time to do the effluent treatment. Now that kind of a company becomes a no-no for me completely. Growing at the cost of some future, probability of a complete shutdown in the factory. So such are the risks that I cannot make in my portfolio. Even though I'm looking at the financial number, the company is growing at 25-30%.
Now you've talked about, the risks, the opportunities, how good the benefits of ESG. But then now when we look at ESG stocks, what are some of the few risks? Because every investment would have a risk.
These companies need to cough a lot of cash in complying the standards that are, mandates that are there for ESG. Then there can be problems in the profitability, and that can lead to financial trouble. Second is, because ESG is now becoming a fad, it also means that your investment, it's one of the most sought after basket, and hence people are bidding higher prices for that quality, right? It's like, if there is a chip shortage in the world and Apple has its product, Lenovo has its product, but people are bidding that, I want to go for Apple, and, I'm ready to pay 20,000 more for an Apple product. And hence, you're getting the Apple product, but you need to pay even more. For example, right, we last year, in fact, when we launched our green energy portfolio, Abel, you would also remember, there's a company that we discussed, KPIT technology, right, which is helping a lot of global giants like BMW to convert their manufacturing of ICE engines towards EV vehicles. Now that company stock price was 150 then, and today it's 750. Now at 750 price, whether a guy wants to buy at that price and still think that there's still a multi-bagger to be made, it can deliver good returns from here also. But my point is, you need to be conscious of the fact that it has become so expensive already. Third risk I would say is in ESG investing, no one should bet on these kind of funds for the shorter run. In the shorter run, these companies have to spend more cash to be ESG compliant, or they have to let alone go a lot of opportunities, which opportunistic entrepreneurs will take. In textiles, the past decade was a washout decade for India, and we've covered this in one of our reports. Why? Because countries like Bangladesh, Pakistan, Sri Lanka, they gained a lot of business out of India, because they did not have very good social standards, maybe child labor abuse or things like that. Hence, the cost of manufacturing was low, and a lot of business got shifted over there. But in this decade, post-COVID, so what looked like a short-term loss for India, now we are staring at a very long-term gain, because we had always these standards, because we were always very conscious in what kind of social requirements that were there in manufacturing, and we complied to that. We are looking at a golden decade of manufacturing in textiles if people shift over here.
Got it. I think all good deeds come back to reward us. So even if you look at a lot of reports, whichever company X or Y, when they say, okay, this company has a factory in this so-called nation where child labor is prominent, it looks very bad on that company. That I think all the big brands have become more conscious about social responsibility.
In fact, just a month ago, US has passed a bill mandating that no imports can happen from Xinjiang region in China because of the Muslim Uyghur labor problems that they have. So your whole business can go for a toss if you are compromising on all these things.
So now that we have a clear idea of what are the risks and what are the benefits of ESG, what is the bottom line? If I include ESG investing, does it increase or decrease the overall risk of my portfolio?
See, for a longer term portfolio, fundamentally it reduces a lot of risk, because please understand, I am buying companies which have corporate governance standards of the highest authority, right? Hence, I'm making sure that these are not fraudsters, or these are not companies which will maybe compromise my minority interest. So my risk gets taken care of. Second, if I'm looking at whether the environment compliance is happening properly, so it again reduces my risk of getting notices from the pollution control board or things like that, and hence my risk of business disruption goes away. Similarly, if a company is not socially doing things, they can have unrest in their community, and that can disturb the operations of the company again. And that gets taken care of if the company is socially compliant. So ESG compliance definitely reduces the risk in a portfolio. That is for sure.
How do I know, like, even though ESG is a great investment strategy, one of the best, it might not be suitable for each and every person or each and every investor. So in that case, how can we say whether if it's suitable for me?
One thing is that I need to feel very good about my investment. That is okay. But I also need to, feed my family out of it, right? I need to create a retirement portfolio out of it. So I cannot be talking gyan and not, concentrating on the returns. So it is also very important to check the valuation of the stocks or the portfolio of stocks that you are buying. If the stock portfolio is way above the valuation metrics that normally should be there, then it will start affecting your returns profile, and hence it might not be suitable for you, because for your retirement fund, for example, you need at least 12% kind of a return on your savings to happen to create the retirement portfolio that you need. And the ESG fund you're buying has become so expensive that the expected return has fallen to just 7%, then it is not suitable for you. And third, the quality of companies that you're buying, if they're just buying the tag for the sake of it, then that's not suitable for you. So these are the 2-3 things that you need to check.
So if I would ask the expert, that is you, into ESG investing, where does a layman investor like me start my first step of a journey into ESG investing?
It is very simple, technique that one can go and check a lot of simple parameters to come to know whether the fund or whether the thing that he's getting into is something which he was looking for or not. Till you cannot do it yourself, for example, you are tied up with your work, or you don't have those kind of bandwidth to do those kind of things, there are ESG compliant funds for individual investors, and these are firms which I know for sure are working day in and day out, just not assigning any mechanical score, but also visiting the plants, talking to the management, looking at their growth and also their future prospects in terms of returns, and very importantly, complying on the ESG scores, actually to make the environment better or the corporate governance standard better or the society better, rather than just achieving those scores mechanically.
So Arvind, thank you so much for joining us today. It was really a great pleasure, very insightful. So audience, comment below whether you will be beginning your investment journey with ESG investing, and subscribe to Small Case for more masterclasses about investments and strategies with Excel with experts. Thank you and have a great day.